Hi, it's Stu Richards from Bredin. Thank you for joining us for our Fastcast today on riding the wave of small business startups. As people log in, what we wanted to do is give you a quick overview for those of us, or those of you who aren't familiar with us. Here at Bredin, what we do is help our clients to better understand and engage the small to mid-sized business audience with the ultimate goal of helping them achieve their marketing goals in the SMB space, however they define it. And it can include a wide range of definitions. We've worked with clients who look at the SMB market by headcount or revenue or industry or location or stage of growth, or just looking at women or minority-owned businesses, for example. We at Bredin tend to think of small businesses as, well, very small as under 20 employees, small as 20 to 99, and mid-sized businesses about 100 to 500. But again, it varies quite a bit depending on who it is we're working with. And as you can see, we've worked with quite a few marketers to the SMB segment, whether they're in technology, telecommunications, HR, financial services, office supplies, or you name it, lots of different categories. But our goal, regardless of who we're working with or which specific segment we're focused on, is to help them achieve, as I mentioned, their marketing goals, either through better understanding SMBs, through research, or by outreach programs. On the research side of the house, we do a variety of different kinds of research. It might be qualitative, for example, focus groups or in-depth interviews. It might be quantitative online research. The specific audience that we survey can vary quite a bit depending on the role or title or management level that we're looking at, the industry, the location, the size of business, or other attributes like, do they have, are they using a particular product or service? Do they have intention to use that product or service, or some other attribute like their age, which we'll be focusing on mostly today. The kinds of things that we look at for clients really vary. You can see the column in orange. It might be around attitude and usage, or developing segmentation, understanding the buyer journey. But ultimately, the goal of the research that we do is designed to provide insights to support go-to-market strategy, to support product strategy, to support improvements to the customer experience, or to generate data that can be used in outbound programs. For example, conducting a survey to generate data that can be used for content, for PR, for social, for sales support, or other kinds of initiatives. And the content that we create can take a variety of forms. Again, maybe based on research that we do, might be based on research that you already have from other sources, or it might be completely independent of research, and it might be much more advisory, kind of how-to content. But the goals of our content are to position our clients as trusted advisors to the SMB audience, and ultimately to help them achieve their goals across the sales cycle. But what we wanted to focus on today is specifically startup businesses. So I'll be joined by Bruce Kimmel of MarketForce. Bruce, what I wanted to do at this point is ask you to introduce yourself and tell us a little bit about MarketForce.
Sure thing. Thanks for having me, Stu. I am Bruce Kimmel. I am the SVP of Growth and New Business at MarketForce. I am charged with helping helping our clients and prospects reach out to brand new, newly formed businesses with their marketing messages, whether it be through direct mail, through digital, through social, through email. Our data is what powers all of those marketing efforts. And MarketForce has been doing this for coming up on 39 years now. Happy to say that our first client is still a client today. Naturally, over the years, we've improved our product and our offerings, and we'll learn more about that as we go through this presentation.
That's great. Thanks, Bruce. And by the way, if you have any questions as we go, you'll see on the right-hand side of your screen, there's a little chat box into which you can enter any questions for Bruce and I, which we'll take at the end of the presentation. But to jump in, we wanted to start out with context, specifically around the rate of new business formation since 2005. And Bruce, if you could talk to this slide, I'd love to get your take on how you would kind of describe the long-term trend from 2005 to roughly 2020 in new business formation in the United States, and then what happened as of roughly the beginning of 2020.
Sure, not a problem. First, I think it'd be helpful just to identify what we consider to be the new business. What we track is the new business registration. So it's from the moment that the entrepreneur files their registration with either their state secretary of state or their local registration authority. So that is what we consider to be the new business. That is the trigger that we sell to our clients. That is what they market on. They are trying to reach a new business as quickly as possible from that moment of registration. So if you look at this graph, starting in January of 2005 through approximately 2013, it was basically flat. It hovered between 200 and 220,000 new business registrations a month. Naturally, we did see a dip in late 2008, 2009, when we kind of went through the last recession or correction or whatever you want to call it. From 2013 through early 2020, we did start to see business take off a little bit. We had reached a point where we were bringing in about 300,000 new businesses a month. And then, as we all know, in March of 2020, when COVID hit, everything stopped. We thought we were going to see a much steeper decline than we did, and we thought the decline was going to last a lot longer than it did. But back by July of that year, we had seen 553,000 new businesses registered in the month of July. A lot of that was due to pent-up demand. With everything closed down, people couldn't file their business registrations. The county offices were closed, the state offices were closed. So a lot of that had to do with pent-up demand. So that would explain that spike there. And then I think since COVID, we've been hovering just above 400,000. That's kind of where we've been right now, even with the recent economic conditions and recession, or if we are in a recession, whatever the case may be, we're still hovering right around 420,000 new businesses a month. So we tend to think that that's kind of the new normal that we're going to see, and that we've reached that plateau, and that's where we're going to be going forward.
Oh, that's great, Bruce. Thanks. And just a point of clarification. So this is new business registrations. This is not like net new business, for example, right, subtracting out closures, and it's not including businesses like restaurants that might have temporarily closed and then reopened.
So these are new business formations. But we just released today in our monthly newsletter a report by the Census Bureau's Business Employment Dynamics division, and basically what they showed is that 70% of the businesses that closed in early 2020 by the third quarter had reopened. And by the time we reached mid 2020, there was net growth of 107,000 new businesses from the time COVID hit until mid 2020. Great. So overall, we were able to make up more than we lost.
Great. Good. So I wanted to dig in a little bit further into what is driving the new business formation. Could you talk a little bit about the drivers? For example, are these laid off workers or millennials and Gen Z who tend to be more entrepreneurial than boomers, for example?
Well, as we said in the previous slide, leading up to the pandemic, we did see a steady increase in the number of monthly new business formations. I think a lot of that had to do with, like you said, the Gen Z and the younger folks that were had reached a point in their careers where they were ready to go out on their own and hang out their own shingle and try to do something different. And then when COVID hit, I think there was a lot of need for businesses that addressed COVID era needs and desires, with everybody being, locked down, delivery services. People were building home offices and redoing their homes to adapt to a work from home environment. So there's a lot of need for construction, warehousing and drop shipping became huge. So those types of businesses, I think we saw in the first 3 or 4 months of the pandemic, those really took off, as well as, IT and network security as people were working remotely, remote medical services, remote professional services. We saw a lot of people that were doing, marketing consultations or website design, things like that, were doing it remotely. So I think they rolled out their own businesses. So we saw a lot of that as well. Then of course there were the layoffs and people that were dismissed from their jobs. Many of them got nice severance packages, so they were able to use that money to take what was once a side hustle or a hobby and turn that into a business. So I think that had a lot to do with it. The government was offering some nice incentives to start new businesses as well, so that helped. So I think a lot of people that either had the desire or the need to find alternate ways to earn income, so this is an opportunity to roll out their own business. And then of course, the opportunity to work from home or work remote increased the labor pool. So now if you were starting a small business in New York, you could work with somebody in California or somebody in Europe or somebody, anywhere in the world that was an expert in what you needed. So you had an increased labor pool that you were able to use to build up your business as well.
Okay, let's dig a little deeper into the kinds of businesses that have been formed. You mentioned, government funding to form jobs, or need for construction, for example, to add a home office. But yeah, if you could drill down a little bit more into the kinds of new businesses that are being formed.
Well, as we said, the majority of the business that we saw formed were LLCs, so they're much smaller businesses. We did not see a lot of major corporations starting or companies that were going to grow to be a major corporation in the beginning. So as I said, early in the pandemic, it was service and logistics sectors that saw the largest growth, and they had to support that lockdown lifestyle. Then as we moved through the pandemic and things started to open up a little bit and societal changes started to take place, we saw restaurants and hospitality start to come back. Retail was really huge. I think a lot of people started small retail e-commerce sites. Where they were selling, a niche product or something like that, maybe it was a hobby, maybe they were building something in their garage, or they were buying in bulk and reselling it on an e-commerce site. So that was huge. And then I think, then we saw other businesses that kind of rose to address the changes in the lifestyles of Americans. More and more people realized that they could work from anywhere, and we saw a lot of migration. So moving services, home decor, home decorating, home repair, home improvement, as well as the overall construction trade really took off. And also on the commercial side, there was an increased need for warehousing, so that we saw a lot of warehouse projects pop up. Amazon, among others, was building warehouses all across the country. That has kind of slowed now, but for a while there was definitely a shortage of warehouse space, so we did see that huge explosion there as well. And now that we're coming out of the pandemic and we're starting to see supply chain issues being a major problem, we're starting to see a lot more industrial and manufacturing businesses start to form. And what we're seeing is that they're locating themselves closer to the end user of their product, so the supply chain issues are not as big of a hindrance to their business. So what we're seeing is that overall, both on the consumer and on the commercial side, people are kind of shifting their buying patterns, and they're relying more on local as opposed to a nationwide business. So I think that's kind of where we are right now.
Okay. Now, it's interesting to touch on the geography of these new businesses. Tell us a little bit about where they're being started up.
Well, it's really interesting because during the pandemic, we did see a lot of migration. As you can see, Florida has been very popular. And hopefully all our friends in Florida are doing well today and are getting through this storm. Yeah. But as we saw migration from the northern states to the southern states, or migration from California to neighboring states, we also saw a increase in new businesses in those states. So as people either moved and started businesses when they moved, or because there was such an influx of population into those states, there were needs for new businesses that weren't there before. You kind of saw that that cause and effect in terms of new business growth. We definitely saw early on when we heard about the mass migration out of California. We definitely saw the neighboring states to California really post some dramatic increases in new businesses. And then we saw the remote states, Montana, Utah, Wyoming, South Dakota, Alaska. While not adding huge numbers of businesses, the increase from the prior year was tremendous. As we say here, Montana in 2021 had 19,000 new businesses versus just 1,500 in 2020. So, as people move to less populated areas, there was definitely more of a need for businesses to service those people, whether it be professional services, whether it be retail, whether it be, medical, whatever the case may be. As the population moved, the business trends followed.
Okay.
And then, we've also seen, smaller cities like Des Moines, Iowa, Raleigh, North Carolina, some of those areas also showed the biggest growth during the pandemic. And we also saw large percentages of new businesses there.
Yeah, no, it's amazing to see how work from home or remote work has really enabled a significant shift in workforce and in hiring practices.
Right.
So yeah, it'd be great, Bruce, to hear a little bit about what you see is different about these businesses compared to pre-COVID new business formation that you saw.
Sure. Well, naturally, we're seeing an increase in home-based businesses. In 2021, businesses registered at the home address grew by 21%. Again, a lot of that has to do with the fact that people were locked down, so they couldn't go out and open a commercial business. A lot of it has to do with the fact, just the nature of the businesses that we're seeing started. If they're in the services sector or they're e-com or things like that, with drop shipping and warehousing and things like that, you don't need to have a commercial location. You can run it all from your home. Also, the fact of technology has helped, quite a bit. It's easy to put up a website now. It's easy to, to do all of your logistics, remotely. You don't have to touch any of your products. So I think that made a big difference as well. Also, we're seeing a lot more female-owned businesses, and without trying to be sexist, during the lockdown when, students were learning remotely and from home, it fell on the mother mostly to work with the children and help them with their education. So a lot of these mothers that came out of the corporate world, were able to start some kind of home-based business so they could be there for their family as well as continue to earn income.
Yep. Yep.
So we can see a large increase in those and female-owned businesses as well.
Yeah, no, that's really interesting. And to that point, do you see these new businesses, Bruce, as more kind of lifestyle oriented, or do you see them as really being built for, long-term growth, which, might have been more the case pre-COVID?
At this point, it's hard to say because we're going through a dramatic societal change overall. So with the societal change to, a desire to have more free time, a desire to control your own destiny, a desire to work from home and be with your family. A lot of those changes kind of feed into those societal changes. And, if you think about it, we really haven't gone through a major societal change like this since the end of World War II.
Mm-hmm.
So, it's going to be interesting to watch and see how these businesses do grow. But I think a lot of them were formed out of either a need to address a pandemic need or a desire to change your lifestyle.
Yep.
So it's going to be interesting to see. I mean, naturally there are some businesses that, will grow. There are some businesses that were formed to take advantage of these changes, and they're going to grow and prosper. At this point, we really don't have a really good indication of where we think things are going to go.
Mm-hmm. Yep. Okay. Great. What I wanted to do at this point is just present actually a little bit of new Bredin data. So we're currently in the field with a survey of 500 small to mid-sized businesses, and we just pulled out the first 400 respondents. And among other things, when we conduct research among small businesses, typically we ask how old they are. So here, we just broke them out into under 2 years old. You can see the column in orange, 2 to 9 years old, 10 to 19, and then 20 and older. So the under 2 doesn't align 100%, of course, with new business registrations, but for our purposes, they're still startups. And what we wanted to understand in the question that we asked was specifically how these businesses learn about products and services for their business. So we actually asked them to rate which sources of information they're most likely to use at 3 different stages of the sales cycle. First learn, conduct research on, and then ultimately make a purchase decision on, whatever the product or service is. So if we were to drill specifically into, a printer versus a credit card versus, business insurance, you might get a slightly different mix on this. But so this is kind of the, generic response or, product and service independent response. But it is interesting to see that at the kind of awareness stage, articles, which might be on your site, on a resource center, or might be elsewhere on the web, are one of the ways that new businesses under 2 years old are most likely to learn about products and services, or business in general news sites like a Wall Street Journal, New York Times, other kinds of media, which does speak to the importance of PR coverage for your business to generate awareness. And then search, of course, which really speaks to the importance of making sure that your SEO is working properly. And then one of the things that we're constantly sort of surprised and impressed by is the effect of an email newsletter on awareness. So even if it's just to your current customer base, email newsletters, and we've just seen this year in and year out, and it's not just from research data, but from the email newsletter programs we create for clients, is they can be a very effective way to educate your clients, customers, and your prospects, those who are interested in your services, on what your offerings are and how they're changing. And then webcasts, it's interesting to see the little CD. That just means that 41% for new users is significantly higher than respondents in columns C, which is the 10 to 19-year-old, or D, the 20 and older. So webinars can be a great way to create awareness for new products, your new offerings, among new businesses. Likewise, we asked the same question about the kind of middle stage of the sales cycle, which is once someone has learned about your products and services, how they conduct research on it if they think it might fit a need for their business. And here you'll see, first of all, there's greater usage of each of these sources of information. Out of a total of about 42 different sources of information in total that we asked about, these are just the top 5 ranked in descending order by the newest businesses, the under 2 years of age. And you can see search is super important when a business owner is conducting research to determine a fit with your products. And again, really important to optimize SEO. Articles, surprisingly important, even at the research stage. The resource section of your website, really important to have good content there. It really does 2 things. One is provides context for the usage of your services. So for example, a lot of small businesses, and especially a lot of newer small businesses, might not understand, for example, the difference between a loan and a line of credit, or why they shouldn't have all of their business expenses on a personal credit card. So providing advisory information can really help them understand why it is that they should use their services and which of your services might be most useful for them. And then you'll also see peers. Really interesting for SMBs. They love to learn about the experience of the usage of a product or service from their peers. And then, of course, ratings and review sites really, and that's really jumped up over the past couple of years as sites like G2 and Software Advice have gotten much more robust. Finally, at the purchase stage, when they're ready to make a purchase decision, search again is the top. You'll see the utilization has kind of dropped. They're really consuming a lot of information at the research stage, but to make a final decision, for the youngest businesses, search is most important, followed closely by an interaction with your sales team or a customer service representative. So really important to make sure that they're up to speed on your offerings and can make a business case effectively. The product section of your site, of course, really important to make sure that it clearly describes what your offerings are. Checklist or worksheet, pretty tactical piece of content, but can be very useful to help a business owner determine, for example, what the financial or productivity benefits of your offerings are. And then again, the resources section of your site. So with that, that's just a little bit of context. And by the way, if this information is helpful, please feel free to shoot me an email. We'd be more than happy to send you a copy of this deck afterwards. But with that, Bruce, I wanted to see, in terms of working with MarketForce, how you bring value to marketers pursuing new businesses.
Right. Well, naturally, you need to build awareness of your offering with these small businesses. A lot of these small businesses they're branching out, they're hanging out their shingle for the first time. They need a variety of services, products, whether it be software, whether it be consultation, whether it be promotional products, whether it be merchandise. There's a huge need for, they need phone service, they need internet, they need they need a huge amount of help to start their business, to grow their business, and to succeed. So what we specialize in is helping Beta SMB marketers reach new business owners very, very early in their formation process. We compile our data 24/7, 365 days a year in real time. So it is possible for you to reach out to a new business owner within days or even hours of registering their business. Because we get our data from state, county, and local government registration sources, it is the highest accuracy. Their scale, we're bringing in currently between 70 and 80,000 new business records a week. And then there's the depth of our data. In addition to knowing where the business is, who the business, what the business is, we have SIC codes, we have NAICS codes, we can tell you the type of business it is, whether it be a partnership or an LLC or a corporation, but we also are able to tie that record back to the new business owner. And on the new business owner, we're able to give you their residential address, their personal phone and email addresses, as well as their date of birth. So besides just knowing about the new business, we can tell you things about the new business owner, which comes in really handy for financial offers, if you need to run a credit check or if you need to learn more about what they do on the consumer side. So with that, we feel that we deliver the freshest, most accurate, and most productive new business data to our clients. And again, the sooner you can reach that new business owner when they're in that stage where they're researching partners, they're researching suppliers, and they need to move quickly to make decisions so they can start growing their business, that is the time to reach them. And we have found from clients that use our data as well as some of the other new business data sources out there that they traditionally see a new business record from us 4 to 6 weeks before they see it from some of the other new business data sources out there. So, that 4 to 6 weeks could mean the difference between landing a customer or losing them to a competitor. So we feel that that's the value that we bring. That is our core business. That is basically all we do is new business data. Because our data is so fresh and we do compile it so quickly, a lot of our customers tell us that they can't act on it that quickly. So we have rolled out a service called the ROI Network, and we work with on-demand printers, we work with programmatic display companies, we work with email delivery services so that we can help our clients act on the data as quickly as possible. So that's just another service that we've rolled out to help leverage the speed in which we compile our data.
That's great. Well, I'm going to turn on my camera. We have a couple minutes left, and what I wanted to do, Bruce, is to take questions from the audience. So again, if you have any questions for Bruce or me, please feel free to drop them into the chat box on your right. And we have a couple to start. And Bruce, this first one is for you. You mentioned the role of technology in driving new business formation, whether it's kind of infrastructure like supporting remote work, the Zooms or GoToMeetings, et cetera, of the world. But I'd love to hear your perspective on the role of finance. For example, alternative lenders in providing access to capital on a quick turn basis to help businesses start up.
Sure. What we've seen, again, since the pandemic, we've seen a lot of peer-to-peer lending, and we've seen a lot of online financial resources that have come out, and they're particularly addressing the needs of a brand new startup. A lot of the major financial institutions will require 6 months or a year of sales figures before they'll, even consider giving you a loan. But with these peer-to-peer lenders and these micro lenders that we're seeing, it might just be that $20,000 to $25,000 capital you need to start up, to sign on with an internet service provider, to buy the software that you need to handle your website or handle your fulfillment or something like that. So I think because there is that need, we've seen a lot of companies not grow, but either start out or change their lending policies to address the needs of these smaller startups.
Interesting. And are you seeing traditional lenders like the kind of Main Street banks trying to develop relationships early on with startups now? And
we are seeing a lot of the major banks, a lot of the major players out there are rolling out services to help startups, whether it be from how to file, your registration, what type of business format do you need? Should you be an LLC? Should you be a partnership? Should you be a sole proprietor? They're rolling out packages that help you from here's where I am, here's where I want to be, this is how I get there. And then, they're offering products, whether it be, business credit cards or business banking, to address the needs of these smaller businesses and these startups.
Great. Okay. Well, we're almost at the bottom of the hour. We just have one other question, and that is there anything that established businesses can learn from the practices or successes of these new businesses, which sound like they're, pretty nimble, pretty low cost, and really taking advantage of technology?
I think the biggest factor that they can learn is to be agile. I think we're seeing with the migration and with the great resignation, as they call it, a lot of companies are losing employees. So we're seeing that a lot of larger companies are doing now is they're outsourcing a lot more of their back end, whether it be payroll, whether it be HR, whether it be accounting. We're seeing those types of businesses starting to outsource, which a lot of the startups are doing because, they don't have expertise in payroll, they don't have expertise in accounting. So there are a lot of either companies that are specializing in this now or online services that can do this for you, whether it be a Gusto or a PayPal or Paychecks or things like that. We're seeing a lot of these other companies do that. So I think that's, one of the issues. I think also tapping the freelancer pool. There are a lot of very, very qualified people now that have hung out their own shingles. Either, they were let go of their company during the pandemic, or just the lifestyle changes they made allowed them to hang out their own shingle. So I think there's a lot of very, very qualified freelancers out there. And, we've seen some of our customers that have started to work with a lot of these freelancers, whether it be in marketing, whether it be in operations, whether it be in HR, they're working with these freelancers. And then, I think also another thing that we're seeing is partnering or contracting with other companies that can complement you in areas that you're not as strong in. Again, whether it be in logistics or warehousing, a lot of companies we've seen have taken that functionality away from an internal group and given it to a partner or a contractor to handle, because they've got either the expertise or they've got the machinery or the necessary infrastructure to do those kind of things. So I think, more established businesses, if they're going to succeed, are going to have to start to take on some of these trends as well.
Fantastic. Well, I want to leave it at that. And again, if you have any follow-up questions, please feel free to send me an email. If you'd like a copy of this presentation, my email is at the bottom of the slide. If MarketForce can help with delivery of new leads, please reach out to Bruce. If Bredin can help with insight into the small business audience, whether it's startups or more established businesses, or whether you look at businesses in other ways by size or industry, please do let us know. We'd love the opportunity to help you with insight into the SMB mindset or outreach via content development. But we will be presenting a webcast in the near future with more information on the information sources that work to engage SMBs across the sales cycle, as well as their interest in credit, in the usage of banks and financial services, as well as their interest in SaaS and how to engage with them most effectively as a SaaS vendor. So lots to come. But in the meantime, I hope you found this presentation to be useful and you got some good food for thought. We appreciate your attendance, and we'll look forward to seeing you on the next Bredin webcast soon.
Thanks for having me, Stu.
Yep. Thanks again, Bruce.
All right. Bye-bye.